If we're going to take a look at what's happening in the market here in August of 2023, I think it's going to be fascinating because there's a lot of great misinformation out there that is just consuming people's minds still. And so I want to kind of go over this. And then at the end, you're going to want to stick around because we're going to apply and talk about what's happening specifically in Pierce County and the Tacoma, Gig Harbor, all of that area south of Seattle. Here's what I mean is consuming people's minds. The consumer perspective, what people think is going to happen to the prices of homes in America is really just fascinating. Here's what I mean is the consumer confidence in home prices has just continued to weaken. And what we're discovered is it started off in 2010, people thinking it's a terrible time, prices, we came off of a really bad season, which is really true. And we see that through 2010, 11, 12, 13, the consumer price, confidence fell and got stronger and stronger. And we got down to the bottom of that. Like in 2017, people thought, well, for sure, it's got to get better. 94% of people thought, hey, it's a great time to buy. And honestly, for a lot of that, once we transitioned through all of that, it started to go up. Then we started to have in 2018, people thinking, it's a terrible time to buy. About 14%, but still, you got 86% of people thinking it's a great time to buy. And then that slowly started to go down. And we have our pandemic years here, the crazy unicorn years to where prices were really escalating up. And then we get to 2022 and we have the rate increases. We've had huge year-over-year appreciations, and we'll talk about that here in a minute, in a couple slides. But the consumer confidence, then people thought, okay, this is a horrible time to buy a house. And so the consumer confidence has continually weakened. And so it was at 37%, which is, a very, very high number when you think about a number of people that are looking to, this is a terrible time to buy a home, and potentially, and we'll see this here in a minute too, it's a terrible time to sell a home because most of the time when you sell a home, then you have to turn around and buy a home. And this really came from some news that was out there, and you've seen it on the news all over the place, quite frankly, that there's home prices are going to have a 20% decline. A bunch of people were forecasting that the market's going to drop and the housing prices are going to crash. And so there is just a lot of just crazy things back in December of 2022 that just thought, hey, this is, I don't want to say it this way, but really basically it's all going to hell in a handbasket. And they used some reports to talk about this of this is what people are thinking. And they're like, hey, we're going to 100% repeat what happened back in 2008, 9, 10, 11. We're going to repeat that. People thought consumer pricing, the confidence went out the window with the pandemic hit. And so we have that unicorn timeframe. And the conversations about it crashing just went to ultimately January and into 2022 through that whole our time frame of the last part of 2022. It was really just, people talking about how horrible it was going to be, and the consumer confidence just fell off. Now, here's what's interesting is since basically last, January, we had a 37% of people think it's a horrible time because prices are going to drop. And, that has slowly changed. We are down now to where kind of getting more people believing that the home prices aren't going to depreciate, the home prices aren't going to crash, and we're down to basically 1 in 4 people thinking that the home prices are going to crash. And the data really it's fascinating me, but when this kind of picked up was based upon some conjecture. It was conjecture this way, because this is the normal trend of home inventory. Homes come on the market, they peak out. Everybody's kind of familiar with these, at least enough to talk about how this works. Is like people think, yeah, spring's a time to sell. So they put their house up in the market. There's a lot of activity, that type of thing. Transaction volumes are usually about 30% higher in March, April, May, June, which you see on this graph that's kind of how that plays out. As far as homes coming on the market, people buying the homes, they want to get ready for kids in school in the fall, kind of that type of situation, or it's just kind of even a familiarity to it. And so last year in 2022, we had this increasing bump in inventory. And people started to project, here it comes. Interest rates all of a sudden, went from 2.5%, 3%, 6%, 7% in just a short, rapid time. You even had the Fed talk about this when he said, hey, we're going to have reset the housing market. So, man, when you use terms like that from the Fed, we're going to reset the housing, it's people panic. And I don't blame them. You get somebody with a big microphone and talking loudly, projecting these things. People follow, people listen. And I don't blame them. And I don't fault people for that. But it's always good to kind of have a reference point of like, well, what really happened? What do we have a little bit of a hindsight here to take a look at actually what happened? So instead of going up and to the right with just inventory soaring, people decided, I'm not going to sell. This actually is what happened. So we have homes coming to the market has continually declined since that point in time. It didn't go up and to the right because people decided, well, maybe it's not a good time to sell anymore. And sellers had been in a very strong seller's market, and then it just changed. They just like, well, I guess if it's a bad time to sell my home, why put it on the market? And a little bit is because they're thinking, why would I sell and then replace with a different home that has a higher interest rate? So it's kind of became this weird cycle of catch-22 where people just decided not to sell, and it didn't really matter. And with this idea of what we just talked about this previous slide, it's going to just go up and to the right, and there's just going to be more and more homes, even though that isn't the case. There's a lot of things that people were thinking that was going to fuel this. And that didn't happen, that didn't show up. And I want to talk about those specifically here for the next few. There is this idea is that if we have a massive recession, which we're going to have, that's what everybody's forecasting, this massive tank, jobless, everybody, is going to be unemployed. And at the end of moratoriums, we're like, hey, no one could foreclose on a house because of the moratoriums. And because of that, there's all going to be these foreclosures coming to the market. And people started talking about that. Matter of fact, last year, about this time, that was a very common question is like, hey, when are all the foreclosures happening? When are they? Where are they? When are they? Where are they? And the reality is they're not there. They're not there for a couple reasons, and I want to slowly kind of look at this data here because, man, I tell you, it's interesting in my mind. So when we have the 2008, 9, 10, 11, remember those are some really peak foreclosures, and we understand why those happened, right? Anybody that's looked at this, there were some very bad lending practices, interest-only loans with the assumption that the market was going to continually go up. There was lending practices that you didn't have to prove job. There are a lot of things that were just goofy. And since then, really a credit to financing changes. Like we couldn't give loans out. They couldn't. I don't give loans out, but people couldn't get loans that needed to work on some credit issue, those type of things, which historically back in these areas that led to this, they had, and really some bad lending practices. But we see since then, it's been this steady decline year over year. And quite frankly, the 2014, 15, 16 years, that's actually a normal foreclosure rate. Somewhere around that 500,000 to 600,000 homes. Now, I'm not saying that's normal as in it's a good thing, things are normal. No, it's horrible for those families that are in the middle of that, dealing with that. But that's what a kind of a normal was historically with this massive spike. And then things have continually gone down. Now, this is kind of obvious why this would happen is if you started to have people have a consumer confidence that it's a good time to buy a home and inventories haven't gone up, i.e. we haven't built enough homes. And if you look at some of the data, you'll realize that there was about a 10-year span that we had built the fewest houses on record for a decade. You'd have to go back to fewer, would be back into like the 50s and the 60s. You have to go that's like how many few of homes that we built, which is very, very problematic. And so home prices started to go up. People started to get into them, and obviously, if you could sell your home easily, your chance of foreclosure goes down. And that's what we saw continue to go down. You don't have to foreclose if you could sell your home. And so this is what people were then expecting. Like, okay, we get here and here's our pandemic where it very much was difficult to foreclose on a home. What's fascinating, because I've seen the clickbait, and you probably have too, people saying foreclosures are up 3 times over 2 years ago. And so when you look at 3 times, well, yeah, they're 3 times as high, but we're also at this massively low number. 185,000 when we know normals are somewhere between 5 and 600,000. There's not a flood. And there's not a flood because you could still sell your home, and as long as you don't have a second mortgage and as long as you don't have massive amounts of debt of which you can no longer afford the life that you're living, you're not getting foreclosed on. And quite frankly, you could put your home up for sale, because we're going to see this here in a second, and it will sell. And people think, okay, well, that hasn't happened yet. And so I just want to speak to the naysayers out there saying, oh, yeah, but it's still coming, it's still coming, it's still coming. Well, you really have to talk about delinquencies. If it's still coming, then what we're having is people that aren't paying their bills and aren't paying, and so now they're saying, okay, well, it's building now. Well, the data does not suggest that it's building now. Matter of fact, it's suggesting that it's going in the opposite direction. People that are either serious delinquency or delinquency, i.e. 6 months or more, has continued to go down and to go down and to go down. And this is what we're having is people are being responsible. And isn't that great? I love that. We live in a country where people are being responsible, taking care of their finances to the best of their ability and being wise. And I just want to commend people because that's a great job. Because sometimes things are real tough, especially with some of the inflationary things that have happened. People have, tightened up their belt buckle a little bit, as my dad and uncle used to say. And that's not a bad thing at all. So we end up ultimately here, what they're talking about, like I just alluded to in that last slide, is the overarching, the delinquency rate is just continued to go down, and serious delinquency rates have followed suit. It just has gone down, and it's since the last observed, it just continues, which is a great thing. So when you have foreclosure rates already at record lows, like we talked about in this previous slide, these are historically record low numbers, and not rising because people are, like we just looked at this slide, there's just not a lot of people putting more on the radar. Well, we kind of end up in a place to where what happened then with home prices. So if we had all people thinking that home prices are going to crash and then it's going to flood the market with all these homes, and then that's going to crash the market, well, we need to kind of take a look at this in, I think, a little bit better detail, because this is, once again, sometimes news throws you off a little bit because they'll talk about home prices differently than they really are. What we normally like to view is year-over-year appreciation or depreciation about like what's happening with actual home prices. Here for you to kind of take a look at. If we break it down a little bit and say, hey, let's look at month over month, but at a basically 50-year retrospective view. This is how the monthly prices increase or decrease or appreciate or don't appreciate month over month. So we look at 50 years, this is what we see. January usually is about 0.12% above December. This is 0.25%, and then it goes up. Remember, we talked about our spring sale, like prices kind of go up a little bit more month over month during this, and then it cools back down to where we have just a slow appreciation. Now, this is what we see when we talk a lot about, on our team anyways, is if you look for the last 50 years, home prices have gone up basically somewhere between 3 and 5%, 3 and 6%, year over year. That's kind of the average of what it looks like. A little higher some years, a little less. And even if you were to throw out the unicorn years on both sides, you kind of get that same unicorn years being the depression or the massive recession, 2008-9, flood of inventories, home prices come down, and the unicorn years of where we had the pandemic and people got kind of lots of opportunity to buy with very, very low interest rates. You throw all of that in there, and this is kind of what you still get over 50 years, because big picture kind of helps settle the nerves, I think, a little bit. So this is the monthly average month over month appreciation in a home, and then we base the following years year over year on that. So let's look at what happened this year. Now, our month over month, we talked about it was down. January, right there, I don't know if you see this here in our January numbers, the month over month, it was down from what it was. So we had this 0.5, and then it went in 0.2 month over month. In comparison to the 0.3, the 0.6, it was at 1.3. So, and then it went to 1.5, and then we have 1.2. So these numbers are fascinating to me because, you look at these and it's just not what people are saying in the fear on the news. And there was this of course, in the pandemic years, and really they're unicorn years, we don't expect things like that to happen again. And I don't want them to happen again, quite frankly. We did have some markets, certain markets, and every market's different. And we're talking about areas that we serve. We serve both Thurston and Pierce County, but we'll talk about Thurston County more specifically here in a minute. And then on a different video, I'll be talking about specifically then Pierce County, which is another one to kind of dive deep. So depending on where you're looking, because there are kind of two different markets that have two different things happening in general as part of the whole Puget Sound, the South Sound area, but we'll talk about that. So, but when you have like, if you look at skyrocketing appreciation in the last 3 years through it, all those, there are some markets where this is astronomical. I mean, this is really just astronomical. You're talking Atlanta and you're talking Boston, and you can kind of go through this list. Seattle was a part of that, which is north of us, which impacts our market, but not necessarily the direct impact that I think some people would have, because we're about an hour south or 30 minutes south of Seattle, and Seattle has different things that have impacted theirs, but they had a 37.8 over the last 3 years, which is a very, very strong. But that's not as strong as, say, like a Tampa, where you had a 63%, which, perhaps like in those areas, I don't know, because I'm not the local agent in those areas, and you'd want to reach out to a local agent or if you happen to be living there. But ours is a little bit different, and ours where we're at is still a little bit different. And so that skyrocketing appreciation, those are different areas completely. But based upon those skyrocketing, people originally forecasted, back 6, 8, 9 months ago that, hey, things are going to drop. We're going to have this drop in home price evaluation. We're going to drop. Very few people were saying that there is anything positive outside of one organization, CoreLogic, which I think their data is really, really helpful. They've all changed. Their original forecasts going into this year were it's a technical term. You now have this different viewpoint about it completely. And that's what we're looking at here is they're forecasting, no, they're going to be the same, or they're going to go up, or they're going to be the same, Morgan Stanley. And then other ones are projecting, no, we're seeing the prices go up. And that's really what happens. The thing what I think needs to be observed most is this truth. A deceleration of appreciation, when appreciation decelerates, it's not the same as home prices depreciation. So we can't sustain this, and it never should have been at that levels, but it was, and that's what happened. But just because things aren't going up year over year or over span that high, well, they should have never. But now that they slow down month over month, that doesn't mean homes are crashing. Just because we're not going to have a 5% or 8% year over year appreciation, that doesn't mean that a 2% is bad. It just means that it's a 2%. That doesn't mean you lost money or you missed the time to sell your home. None of those are true. It just means that we're not going to experience that same astronomically high year over year appreciation. And I think all of us would say, yay, good. That's not a bad thing. But what dictates all of the appreciation or depreciation, and like we went back, if you go back to 2008, 9, 10, when you have a flood of homes on the market, well, then people have options, prices come down. When you don't have a lot of inventory, well, supply and demand continues to fuel the economic system that we're in. And ours is an inventory issue. It really has and continues to be. So when we look at, week over week, year over year, month over month inventory, last year, we are down the same week as last year, 8.8%. And if we were to go back to 2019, we are 50% below that for inventory. Holy snap in arsenals, Margaret. That's just crazy. It's really is a historically low time of inventory, and specifically in our area. So here's the fascinating part in Pierce County. So really how the numbers play out is we are having a inventory shortage continue, and especially this is seen the year over year. So last year in 2022, we had 11,883 listings come to the market year to date. And now we compare that to this year, and jump on my cursor here, it's like, see 7,750. That is such a dramatic drop off. And so our problems with regards to home prices or affordability, even with the interest rates going up, what's happened is just less homes have come to the market. And so we still have a seller's market, even though it's just just less buyers, but there's so many less listings. So the whole problem of more inventory surge, like we were talking about earlier, what people would fear because it just hasn't come to pass and really doesn't look like it's going to come to pass because the problem has been here for a while. And like I mentioned earlier, it's been 10 years in the making and now it's continuing. So we're having the year-over-year appreciation. It's still happening, maybe not at the same rate that it was during the unicorn years, but it's still happening. And there is still people who would want to buy homes. Right now, what we're seeing is just not as many people are wanting to sell their homes because they're in a low interest rate, perhaps, because they just decided they're going to wait to see if sometimes it comes better in the future. However it is, this is what we're discovering, and this is what we're experiencing in Pierce County. So we're Tacoma, we're talking Gig Harbor, Puyallup, all of that area through Sumner, Bonnie Lake, all of those areas. It's the same thing of what's happening. So if you're interested in buying or selling tonight, it really is honestly still a very good time to sell. There is still good buyer demand. And part of that is because there's just fewer homes coming to the market. So just kind of want to put that out there for you to be thinking about. Hey, I'm Joe Slawter with the Live Well Home Group. And if this information has been helpful and you want to schedule a time about potentially selling your home or buying one in Pierce County and Tacoma area, click on the link below and make it easy for you just to schedule time on our calendar.